Today on MSATP TV, we have Jerry Lotz, who is the owner of CostSeg Energy Solutions. We're going to have a conversation today just explaining a little bit of what CostSeg Energy Solutions does and how Jerry could reach out to some of our members and help them with some solutions that may help their business and their clients. So thank you for being here, Jerry.
Always a pleasure, Gigi. Thanks for having us.
Yes, of course. So we'll get right in. How did you get into cost segregation?
That's a great question. So I spent a lot of years in medical sales. I love what I did, met some great folks, had an opportunity to travel, but always had the gnawing to do something on my own. And through the years of medical sales, that gnawing kind of stayed with me. I was with a large company, and back in 2010, they had a reduction of force of 600 people. And I was in a little group, a specialty group of 6 people. And our group of 6 was kind of an easy target. So I was figuring out what I want to do when I grow up, spent that next number of months looking and networking and things, and first heard about cost segregation and could not believe that such a thing even existed. But I ended up back in medical sales for a few years again. And then when that stint was coming to an end, I thought, you know what, if I'm going to do something for myself, I got to do it now. But I don't want to do something for myself unless I know that the people that I'm working for, the initiatives that I'm representing, are always going to do the right thing.
Mm-hmm.
So I went back to the networking roots, and I had this thing about cost segregation gnawing at me, and the fact that you could take a building and pick it apart, and some of those assets in that building can be depreciated more quickly and generate some significant tax savings. So I thought, you know what, it's all about relationship building. I had no relationships at all in the accounting community. And I thought, well, I can do this. It's a great mission. I can get behind it. I feel passionate about it. So I made a trip to Louisiana, where the company that I represent is headquartered. And I was just blown away by their warm welcome. The owner of the company met me at the door. He and 2 other VPs and I went to supper and just had a great visit. And I went back convinced that, yeah, this is where I need to be.
It was a good fit for you.
It was a good fit.
Mm-hmm.
Yeah.
Yeah, that's great.
So that's what got me here.
That's great. That's great. So can you explain to us, what is cost segregation?
Yes. So somebody has a building, somebody buys a building. Say they pay $1 million for a little strip building.
Mm-hmm.
The IRS says that they depreciate that because it's a commercial property over a 39-year timeline.
Mm-hmm.
So for rough numbers, let's just say 40 years. So they're expensing or writing off $25,000 every year for the next 39, 40 years until they've fully depreciated that property.
Mm-hmm.
The tax code also has caveats in it that say, okay, that whole building in and of itself is not necessarily a 39-year depreciable asset. There are pieces of that building that can be carved out, identified, and a dollar value placed on those, and can be depreciated much more quickly.
Wow.
In either a 5, 7, or 15-year class life.
Wow.
A lot of accountants that I've talked with, know that carpet's a 5-year asset, and landscaping typically is a 15-year asset. But to really get down and fine tune a building and break it apart into where they can put a dollar value to the penny on the carpet that's in that building, most accountants do not have that construction and engineering expertise to do that, and they do not want to do that.
Sure.
So that's what we do. I work for an engineering-based company in Louisiana that's been around 20 plus years and has helped owners of more than 30,000 properties across the country. And we go in and break a building apart and put values on every piece that makes that building up. Ceiling systems, carpets, countertops, built-in cabinetry, decorative lighting, essential lighting. Even the lines on the parking lot can be valued and depreciated more quickly than the entire building.
Wow.
Yeah.
That is amazing stuff. That's
Yeah.
amazing. So can you give us, I guess, what is the average savings that you could save that typically that you see
Sure.
that you could save a client?
Sure. So for every $1 million worth of a building's value,
Mhm.
we typically say that we could depending on the building, we probably can save anywhere from $30,000 to $90,000 worth of tax expense for that owner.
Wow.
So in order to save $90,000 worth of tax expense, we're finding maybe $300,000 worth of assets of that million that can be pulled out and depreciated more quickly.
Wow.
And since the Tax Cut and Jobs Act 2017-18, a number of those assets that can be pulled out and have a less than 20-year class life can be actually written off 100% the first year of ownership.
That is amazing.
So it really is amazing. It just blows me away, some of the numbers that I've seen. I did a study for a guy that had, oh gosh, a dozen Dunkin' Donut properties.
Mm.
So he was looking at an income, this was a couple of years ago. He's looking at an income of about $1 million for that year. That same year, he spends $1.2 million in building another site.
Mhm.
So brand new, site work, parking lots, driveways, canopies, countertops, all the state-of-the-art equipment and things inside. Of that $1.2 million that he spent outfitting that property, we were able to find $620,000 worth of assets that we could take out of that $1.2 million, and he could write that off in the first year he owned that property.
Wow.
So now he's not paying taxes on $1 million. He's paying taxes on $1 million less than 620. So he's still paying significant taxes,
Mhm.
but only on $380,000 of income.
Yeah, that's amazing. I mean, that's great work, great work. I imagine that it's very valuable to a lot of business owners to, have you come in and estimate how much they could save. That's very eye-opening.
Thank you. And it's a good point that you bring up. You used the word estimate,
Mhm.
and we were happy to provide an estimate for any property, whether it's newly bought, newly built, even if the clients owned it for a number of years, there's still likely an opportunity to find some catch-up depreciation in the client's building.
Okay, that's great.
Yeah, and the costs of that, of cost segregation studies, has drastically come down. When it first came on the map back in the mid-90s or whatever, the application was reserved for only the mega $1 million building complexes. The big 4 accounting firms had access to it.
Sure.
It may cost $50,000, $60,000, $100,000 to cost segregate a building at that time. Now, through experience in technology, we're finding positive return on investment for clients that have rental townhouses worth $150,000.
Wow, great stuff.
Yeah.
Yeah. Wow.
Yeah.
That's
So
amazing.
a warehouse probably would not have as many assets in it as a luxury hotel that could be depreciated more quickly.
Correct. Yes, I can see that.
But certainly there's a positive return on investment for basically any type of property that we can study.
Okay.
I just did a townhouse for somebody that had this property. It was $180,000 invested as building value.
Mm.
Of that $180,000, it was a nice townhouse. They bought it at a great price. Of that $180,000, we found close to $30,000 that they could write off in year one.
Wow.
So they're writing off $30,000. They're saving about $13,000 in federal income taxes. And our cost to do that, as I mentioned, costs have come down drastically. Our cost to do that project was about $2,500.
Not bad at all.
Not
That's
bad
great.
at all. So that's a before
Yeah.
tax, and that's also a deduction. So after tax, that $2,500 actually becomes about $1,800.
Mhm.
So they give us $1,800 and we help them to save $13,000 in tax
A
expense.
great return on investment.
Super return.
Yes.
Yeah.
Yeah. Well, that synopsis of what cost segregation is and how, valuable it could be to business owners or
Sure.
real estate owners.
Yep.
That's great. I'm so glad that you could explain that to us because I myself had no idea
Yeah,
what
yeah,
cost
sure,
segregation was. So
sure.
that is great. I'm sure our members will find value in just even knowing how cost segregation could benefit their clients.
Sure.
So from this conversation, what would you like for our members to take from this conversation?
Sure. I mentioned a phrase that I use every time that I have an opportunity to speak with the members at one of the events, that whether a building's newly bought, newly built, even if it's been around a number of years, there's still an opportunity for a free estimate of tax savings. We love to do that. We do thousands of estimates every year. And I'm really excited that more and more members have taken the leap of faith and entrusted us to help their clients. I've run across some folks in the accounting world that, if it ain't broke, don't fix it. We've been doing this for 50 years this same way. We're not going to change things. But a lot of the folks have said, you know what, maybe it's time to take a second look at a different way to help our clients to save money. And I love educating tax professionals and clients in the opportunities available to save money.
Sure, it's a great value proposition for our members, with their clientele. So I think that there's definitely value in it, and it can increase the value proposition of our members for their clients.
Sure. We try to make it as easy as possible. For a client that's owned a building a number of years, we have to change their method of accounting, right? So there's an IRS 3115 form that's involved. Our company does the heavy lifting with that.
Okay.
There's a 481A adjustment that's involved. Our company does the heavy lifting with that. So we try and make it as painless as possible for the tax professional and for the client, pretty much a turnkey process. So if you haven't had the opportunity to let us provide a free estimate, I strongly encourage you to do so, because the worst thing I like to see is for a good tax professional to lose a client to a bigger firm that all of a sudden tells that client about an application called cost segregation. And then the client says to their existing tax professional, well, why didn't you tell me about that? So the client jumps ship to a larger firm, and the tax professional, loses a client. We love to help those everyday tax professionals, members of MSATP, keep their clients and help them save more money.
Well, we truly appreciate that. And thank you for coming in today and meeting with me, going over what cost segregation is. And I'm glad that you have been a sponsor of MSATP for many years.
What a great group.
We do
enjoy it a lot.
it.
Yeah, I love visiting with, of course, the staff at the office and spending time with the members at the various functions. And happy to help.
And how can our members get in touch with you?
I've got an email address, jlotz@costseges.com. Certainly my cell phone, 410-960-8269. I'm Baltimore local based, but we do projects all over the country. So there are no boundaries.
Amazing. That's great.
Thank you.
All right. Thank you, Jerry.
Thanks for the opportunity.
Have a good one.
You too.